Hello and welcome to Crypto Weeklies. In this video, we analyze the crypto performance, asset performance over the last key performance period. None of the content is financial advice. Over the last 24 hours, most of the cryptos are up. There was a change in the sentiment as well, reflecting slight bullishness entering back into the market. You can see there is a narrative cloud again on our website. Again, these both charts are available on our website, cryptoweeklies.com. There is now a bullish narrative, also a bottoming related narrative for the cycle. So these kind of narratives, when they pop up, and again corroborated by this long term market attention since 2021, these are the monthly views for popular crypto YouTube channel. What you can see that since December, January and February, there has been a small uptick. Again, we are not at the end of February. Still in the first 25-26 days of February, there has been more attention or more views, monthly views, as compared to the prior months, and something similar happened in from that June July drop in 2022 as well, where the attention kind of rose from that point. And this red line also indicates these are the number of monthly comments, distinct comments on YouTube channel. Again, ignoring this outlier, you can see there were lots of comment in October during the cycle peak. Similar story in May 2021, which was the first major peak in the last cycle. Since then there was again very lackluster activity, and again towards the end of the bear market, usually at the end of the bear market there is a small surge in terms of the view interest as well as comment interest, like there was in November 2022 and December 2022 during the FTX collapse. um, there has been a rise in the comment activities and the views activity as well. Overall social sentiment risk is still down. Most of the narratives are bearish. Again, there is a bullish narrative over here as well. Coming back to the overall composite risk, ETH risk and BTC risk, both in accumulation territory per the composite risk model. Anything less than 0.3 is again just an early indicator of whether the asset is in an accumulation zone or neutral zone or distribution zone. So that flag has also triggered. The price of Bitcoin over here is at around $67,000. Again, still hasn't come quite close to that 200-week simple moving average and hasn't fallen below that level like it did back in June 2022 and also in November 2022, where the price went not just lower than the 200-week but also lower than the 300-week. So that kind of drop is still uh, yet to materialize. Again, looking at the ROI for some of the major assets in 2026, so Bitcoin is down from the yearly open 27-28%. Bitcoin opened at around 87,000, 88,000 in early 2026. ETH is also down 38%. BNB again is often in the middle of the pack, but still down about 32%, getting rid of other assets. Sol down much worse than Bitcoin, 37% down. XRP in 2026 very closely correlated to what Bitcoin is doing, down about 28%. Dogecoin pretty much similar to what Bitcoin is doing. Toncoin slightly outperforming Bitcoin this time around. Cardano Edge token ADA very highly correlated to whatever Bitcoin is doing. Shiba Inu and Shiba again very less activity over here. Tron doing really good this time around, almost in the positive territory in this bear market. That ROI is at only -1%. AVAX has not had a great 2025 as well as 2026. It's dropping much more than Bitcoin. Link in 2026 again doing again essentially correlated with Bitcoin, but with slight more volatility to downside as well as upside. You can see when Bitcoin rallies, um, Link rallies more. When Bitcoin drops, Link drops more. Polkadot and Dot again doing much worse than Bitcoin did in 2026. Bitcoin Cash, that this one is kind of an interesting one for this year. Again, Bitcoin Cash has outperformed Bitcoin. You can see the orange line over here. So these kind of assets, again, comparison all available over here. Just to indicate what could happen with respect to some of the major uh, cryptos. Again, the together Bitcoin and ETH dominance right now, closer to almost 70%, 58% Bitcoin, 11% roughly speaking ETH, together holding 70% of the market share, more than two-thirds of the market share. As in terms of attention, the leading indicator for top, this model did indicate quite early on in June, July 2025 that the top for the cycle is likely close. The bottom detector, the trailing z-score based on standard deviations, um, to normalize the volatility, says that Bitcoin is very close to bottom. Per the February drop, again, it was quite similar to June, July 2024 drop, but not as worse as the again in that uh, lackluster time period in that middle of the bull run of 2021. Also in 2022, that bottoming indicator went to almost at 5% risk in June, whereas in February 2026 it's almost 4-5%. Similar story. ETH risk is slightly elevated at this point. I'd like to see both Bitcoin and ETH risk over here less than 5%, like it was during the end of the first major drop of 2022 bear market, as well as in the downturns of September 2023 and in August 2024. Whenever ETH risk is lower than Bitcoin towards the end of the bear market, typically that's when again the market cycle is closer to the bottom. Composite average of all of these, both the topping and the bottoming pattern. Let's ignore the price for a moment. For Bitcoin, the composite risk is at 0.16. And for context, towards the end of the bear market, it was at around 3% in June, and in November, it was at 31%. So that was the major drop for Bitcoin. So again, no single model can predict all of the downturns. Nonetheless, towards the first major bear market drop, that was in 2022. This is all based on 20-week simple moving average price based discovery. This model did trigger a buy zone or lower risk zone in June 2022. Similar for ETH again. I'll get rid of the Bitcoin price. Similar story for ETH as well this time around. It's still hovering slightly more than 8 to 9%, between 7 to 8% in terms of the accumulation risk in the in relations to the 20-week simple moving average price. So that's the latest on that front. In terms of the portfolio builder, these assets on the top left are the ones which have great annualized reward since 2021 compared to other cryptos and less volatility. So Bitcoin featuring over here, ETH is on the boundary of the gem zone. The rest over here are in the bottom have negative returns since 2021. Anything lower than zero are essentially losing money since 2021, and especially if they have higher volatility, they are in quite in danger zone. The ones to the top right have decent returns but have more volatility, so they are again in the positive territory, but they have overall composite risk associated slightly higher than the ones in the top left, that is. Per the analysis since 2021, these assets on the left in green color uh, are more risk neutral compared to the assets to the right, which are further along on the risk curve and also higher composite risk score. The portfolio builder indicates that, again, just a recommendation, not financial advice, based on price action since 2021. This portfolio builder indicates allocation percentage, helps identify market cap or cap heavy allocations for the top assets. Again, this recommends almost 50% allocation to Bitcoin, then 12% to BNB, XRP, Sol, and Tron. Right now ETH is on the bottom, and again not in that gem zone, as its unrealized returns have not been that great as compared to Bitcoin. So that's the recommendation on this portfolio builder. All in all, if you were to look for any major narratives, the composite risk metric has shown previously. These are some of the composite risk for top cryptos which are active since 2017-2018 time period, again, or 2021 time period for Sol. But one of the older most of the older cryptos, how they are with their composite risk based accumulation or distribution journey, it's covered over here. And last but not the least, the overall peak value estimation of what the completion of the bear market looks like. So again, the market completion, you can ignore the bull market completion, it's just bear market completion over here. Whenever this level falls closer to that 10%, that's when typically the risks have subdued and the market has typically bottomed, like it did back in 2022 when the risk was at the bottom at around 2% in November, and also below 5% in June, and also towards the downturn months of August 2024 or in February 2024. The risk levels never went below the 10% level. That was an area of support in the later half of the rally or of the market cycle. Right now the asset class is in this lowest risk territory where the overall risk is less than 20%, as estimated from the prior market cycles, but it's not quite as low as about 10%. So all in all, hope you enjoyed the content. If you did, give this video a like and subscribe, and check out all of these charts. They are all live updates, not just for the market indicators, but also individual crypto analysis, such as how Bitcoin is doing with respect to the risk of bottoming or topping using the gravity of time model or time weighted average price model, how other assets such as ETH are doing, what's the regression based fair valuation or polynomial regression based fair valuation for Bitcoin. Is it right now undervalued? The answer is yes, but is it closer to the bottom like it was in 2022? The answer is no. So these kind of metrics are all available compared not just to the last cycle, but the cycle before that, and the one even in 2014-2015 time period as well. So hope you leverage all of these analysis in your own opinion formation or any discovery that you would like to make, and hope you stick around. Hope to see you again tomorrow. Thank you and have a nice day.